Welcome to Face. Sheldon McIntyre, how are you?
I'm doing okay. You?
Good. It's been a long time, buddy. So, in order to share your chart, I'm not sure if you've used Zoom before. There's a drop-down menu with the green box that says share.
Search screen. Yeah, they actually
Share screen.
recently changed it to search screen.
Yeah.
Share.
And
Let me
then-
see. Compartir. Yes.
It's the only colored button here.
Yeah.
Yeah.
It's the color of money. Only lime green.
Did you get it?
So counterfeit.
Yes,
Here
it's coming
up
through.
now.
Yeah, perfect.
Yeah. Okay.
Okay. Thanks, Steve. So Sheldon, you in Canada or Peru? Where are you nowadays?
I'm actually in Chile. I live in Chile.
Oh, Chile, that's right, Chile. So, what are things like there? Is there any coronavirus down there that's causing problems for the country down there?
Yeah, we're pretty much like most countries around the world. I think we're sitting at around 5,000 confirmed cases now and around 40 deaths, 40 to 50 deaths. Where I live, we're in quarantine. It's enforced by the Chilean military, which is a little bit new for me, but we're pretty much like everybody else, working from home.
Okay. Yeah, I'm having a little trouble with my computer. We know that Dale has some is we are going to resolve it. Oh, okay. Thanks. So, what are we looking at here? The dollar against the rand. So, your currency moves here. What do you see? An ascending triangle here, Sheldon?
What's that?
Dale.
Yeah.
Why
I'm having a little trouble hearing you, Dale.
Yeah. There is a problem with Dale's computer today. Actually, it's not his connection. He has a problem with his computer. Dale, I know it's weird, but why don't you type in the questions and I'm going to ask them until we fix your computer later today.
Why don't you just why don't you ask them, Steve? Sheldon's a great technician. He has views on almost every market, and he brought charts. So it'd be a good day for you to just take over, get you ready for the
Now
summit.
you sound good, Dale. So
now I'm okay.
Yeah, now you're good.
Now you're okay. So, but if you start breaking again, I'm gonna let you know, Dale. Okay.
Okay. Yeah. Just
so
step
go
in,
ahead, and
Steve.
I'm gonna be here, and I'll step in if there is a problem again.
Thank you. So, Sheldon, what are you looking at here? Is there going to be more dollar strength, or are you looking for some type of topping formation here? Almost looks like we're not confirming up here at new highs by too much using your, what is that on the bottom? Is that an RSI?
It's a Bollinger Band.
Oh, okay. All right. So what's it telling you?
I actually, what I see here is we went into the end of last week where we had an extreme overbought situation. You'll see it sets up similar to 3 previous times where we actually marked tops, and then this time we moved sideways. Last week I put out on Twitter that I thought that there was going to be some type of consolidation, and it just happened there was a confluence also of the 1.618 extension of this particular decline, and that's what's happening this week is we're getting a pullback there. Do I see this going higher moving forward? I do. I think we're going to see some type of consolidation. I don't think it's going to be particularly deep. It will go below the 2016 high, but then I think we'll continue to march forward. I don't really like to be the consensus, but I'm bullish on the dollar on the intermediate term to long term.
Okay, I'd like to address that. Could South Africa? I know they have a lot of political issues going on there, but could this have anything to do with natural resources, or is it strictly dollar related?
I think it's both, but I think in this very short-term period, I think it was really dollar-related. I think that whenever you have such cross-asset volatility, I think, and being somebody who lives abroad, I mean, the number one thing that comes to mind in difficult market conditions is get me dollars. That's the number one thing. And then after that, it filters down into what the commodity complex is, how it's doing, and that, of course, goes into the price. I think that's what's going to be the next part of this stage higher is how the commodity complex is going to be moving forward.
All right, so being a dollar bull, gold threatening new highs for the move at 1700. Do you see a continued dollar strength along with continued gold strength, which most people aren't used to seeing, Sheldon?
I'm just going to bring up a dollar chart. Yeah, I mean, I look at this big picture chart of the dollar. I'm a little bit different than the technical analysts that you have, Ward. I like to look at the really big picture, as you can tell,
Yeah.
and you can see that there's this arc that comes down on the dollar. And we had that false breakout there. I think in the very short term, unless the dollar gets back up here, it's going to be in a process of consolidation. Before we go moving forward, and you'll see that there's these cycles here that run about almost 20 years. It works in the favor of this actually continuing. And a lot of people talked about the dollar and how strong it was and been, but let's not forget what it's been doing since 2011. I mean, effectively, it has been in an uptrend. So, and it is above the 200-month moving average, which is right there. And it held it there, which was a bullish shine.
What's a moving average that's containing it right here, the blue one?
The blue one or the brown one?
Well, the brown you said was a 200, right?
Yeah, the blue up here is just an arc that runs from the high back in the 80s through here, and then comes through this high here, and then comes across. So you can see how prices kind of follow that arc, the highs there.
Yeah, that looks bullish on a close over the arc.
Yeah, I agree 100%.
How do you come up with the arc? Go ahead.
Or a huge bull trap.
Yeah. Well, look, that's exactly right. I think that one of the things that I talked about with people last year towards the end of the year, this was going to be the year of the dollar. Either it was going to decide whether it was going to top or it was going to actually break into, basically a generational rally. And, right now it's trying to decide which way it's going to be.
Yeah, so it didn't decide last year, and now we're a quarter into this year. It seems like everything else is making decisions this year. So you would think it would happen here too. What kind of upside do you get for this kind of just measured move off this? Where would be, where are those highs? Because I'm not seeing the right hand.
I would say the 2002, 2001 highs are something we would see over the coming years.
What is that level? Because I can't see the right hand of the chart.
About 120.
About 120. Okay, thank you, Sheldon.
Yeah.
All right, yeah, that would be one heck of a move, sub-parity euro. So deflationary forces, is that your take? Especially with what's happened in equities, and I'd really like your take as well on what happened to the bond markets that froze up, and even treasuries, which are the flight to quality, had one of the biggest collapses I've seen in my career from a blow-off high at 180 in TLT. So, I'm wondering what your thoughts are there, and then maybe we could go to the S&Ps. Or wherever you want to go, whatever you wanted to talk about. I have a tendency to
it's fine. One of the things that I looked at about 3 weeks ago was when, sort of the peak of this was unfolding, is I decided to take a look at what the Federal Reserve stress test scenario was in an adverse, they call it in adverse conditions. And I saw some things that make you, I'm sure that the Fed was not using its stress test as a blueprint for its policy, but when you look at, the spread when the triple B bond spreads popped out to 480 or something like that, it fits right in with what they were looking for in terms of the first quarter in their stress test. If you look at the VIX actually got a little bit higher than what they were looking for in the first quarter of 2020. And they used the Dow Jones Total Stock Market Index. The index, like I brought that up here, is they had it coming down about, their first level is 35.7%, which came to 22,262, and you'll see we undercut that slightly. So
all you had to do was know what the stress test was for banks, and all of those targets ended up manifesting in every one of those markets.
And absolutely correct. Absolutely correct. The one that got a little bit, I guess you would say, more adverse was the VIX got up to 80, where they saw it at about 60, 69, 70. So
close enough for government work. What a great call.
Yeah.
Actually, yeah. So I thought I was being extreme, looking for 30 when it was 12 and 14. So that's very interesting that the Fed would have these kind of targets and then they manifest. You read anything into that? How did they know?
Well, I think when you look at what happened, they came out on 23rd with really their shock and awe moment.
Yeah.
And when you look at where the equity markets in particular in the VIX were, but also, you know, triple B yields, basically it was at those levels that preceding week where they were hitting those targets. And what happened over the weekend, they came to their plan. They came out before the markets opened on the 23rd, and they laid out their new policy approach. And I think that whether they admit it or not, I think that they in fact were using this as a blueprint for acting, and they wanted to get ahead of the curve, not be, you know, waiting down the line like we saw in 2008. I think it wanted to go big or go home, and yet it effectively worked, at least in the very short term. You'll see that the markets bottomed that day and have stabilized since.
Yeah, that megaphone formation that you're showing in the right-hand corner of your screen, it was a very popular formation, Sheldon, until we got the throwover above the top megaphone line.
Yeah.
And then once it got back inside of it, it activated the formation again, and you already showed having a touchdown there.
Yeah, it came pretty close to touch. Yeah, it was. It's interesting because, you know, there's mixed views on whether megaphone patterns are actually that bullish or not. And someone that did a lot of work on technical patterns, Bulkowski, says that it's one of the worst patterns actually for projecting gains. So I find it kind of interesting that you see that a lot of markets or indices show this particular pattern.
Well, that's because they're indecision patterns.
Yeah.
They're broadening, so people get bullish at the top and bearish at the bottom. They're great for trading if you're a contrarian, right?
Yeah, no, they definitely are. Definitely. And
so what did Bulkowski say? That do these megaphone formations, once they're in them, just continue to swing wildly within them from the top of the band of the megaphone to the bottom ad infinitum?
Yeah, usually actually you have a breakdown towards the bottom. Well, in this particular case, it would be to the bottom.
Okay.
And well, it looks like we came pretty close to achieving that here.
Yeah.
So, and one of the interesting...
That would really be ugly. So we had a throw over on top. Why can't we have a throw over underneath if we had a throw over on top?
Yeah, I think that if we go through the bottom, you know, that could usher in something significant, or also it could create a bear trap and bounce really high. I think that, you know, it's tough to call really at this point when you look at the formation of the market in terms of how quick it has fallen and then how quick it's rebounded. There's a lot of price compression there now. And, you know, the markets can't just go straight down, straight up, straight down, straight up. At some point, this has got to release that price compression and move sideways. And I think we're actually going to have at least another test of that megaphone line, if not a brief throw under, I guess you would say.
Okay.
On that. So
you're looking at this recovery as being a selling opportunity if you froze like a deer in the headlights and didn't raise cash, and you also see it as for a trader a shorting opportunity?
Well, you'll notice here on this particular chart, and it's the same for the S&P also, is that you have this rally coming into the 200-month or 200-week moving average and stalling. And if you go back to 2009, you'll note that in 2011, 2016, and in 18, we tested successfully that particular moving average. We basically melted right through it this time. If we continue to stall there, that would be a pretty good tell that we're going to be moving lower to a test, and that's what I've been watching now.
What's the number on it?
Right now it's at 27321. This is the Dow Jones Total Stock Market Index, so it encompasses the whole market.
Okay. You have an average like that on the SPX?
Yeah, I can. We'll take a look at it.
I'm just curious where that would be coming in. I'm just, picking your brain so I could use it for my own trading, Sheldon.
Okay.
You don't mind, do you?
We'll discuss value after the. No, here we have two on the S&P. We have 2648. We closed a little bit above it yesterday after we broke out. We filled that gap there. So I suspect that we're going to probably dance along there for a while, and it could be where we do it for a while and we release some of that price compression, because you don't see situations where price drops this quickly and then rebounds.
Because I get to my volumes. Can you hear me clearly still, Sheldon?
Little bit. No, I'm having trouble now.
Yeah.
No, Dale, you're breaking up.
Yeah. Why don't you take over?
Okay, try again, because I think...
Okay, because I shut down some things I was using, and it was better for a while. Now it's okay. So it comes in and out here. So Sheldon, in light of my technical issues, why don't you just go ahead and show us what else you want to do?
Okay, I'll take over, Coach. Don't worry about it. Sheldon, what about commodities like metals or whatever? Are you following any of those?
Yes, I mean the principal ones. I'm palladium or the agriculture commodities I really don't follow, but gold, silver. I can bring up a gold chart here, a monthly chart.
Do you have any strong viewpoints for any of them? I mean,
I think the gold, particularly gold, sits in a similar situation as the S&P, where we have this very sharp decline and a very sharp rebound. We did see try to move out yesterday. I think this moves sideways to down to release the price compression. I'm actually more bullish on silver than I am gold in the short term.
Yeah, especially given the fact that the gold-silver ratio a few weeks ago hit an unprecedented, historical high.
When I look at it here, the gold-silver ratio, and I look at the deviation from the mean in terms of the 200-week, you'll notice here I've marked points where we got similar just recently, and we've seen rallies or at least consolidation, rally in silver. So I think that at least in the short term, we're going to see continued strength in the silver versus gold.
Yeah, and especially we know that historically, when all the metal complex starts rallying, then usually silver overperforms gold. So if we get a broad metal rally, silver should be signing a little bit more at least.
Yeah, I agree. I think one of the things we have to watch for in silver, and why I say short term, is that it's currently trading below the 200-week simple moving average, which is at about 1664 here. And if you go and look at the monthly chart, you'll see that it is sitting, the 200-month moving average comes in at 1731. So that's where you're looking for resistance to come and play. You can see here silver was trying to find support along the 200-month there before you had that final breakdown there and wash out of the week holder. So those are the levels I'm looking for a test and for resistance to manifest itself.
You mentioned, by the way, palladium. Palladium has been trading for quite some time as a proxy to risk. So in essence, it has been trading in tandem with equity indices, etc. And in my opinion, it has already suffered like a blow off top.
I don't really follow palladium a lot, but I mean, that for me is a classic blow off top. I mean,
yeah, I'm with you.
Like
I was actually
cornered the market or something.
I was actually short palladium. I made quite a nice trade there, and I do think that as long as we stay below 2,500, we can see a lot more weakness in this market.
Yeah, if you traded a lot, I think there's going to be a lot of intraday swings that you're going to be able to play there, for sure.
What about crude? Do you follow crude?
Yeah, I do follow crude. Well, crude, that was something that really at the at the end of the month, whoops, I missed it past here. Where are we going here? Is that we closed March with the largest quarterly decline since 1980. And, you know, for me, it was really a no-brainer that when you come across here and you see there's a lot of price congestion also along $20. For me, it was a no-brainer that you were to get long a small position at least at the end of the quarter, and that any downside was going to be limited. You'll notice there other large quarters, there was a little bit of downside afterwards and also there. So it was a high probability trade situation. It was one that I took. I didn't take a big position, but it is one that I did take.
Since you like to take the long view on the market, what do you think happens from here in the case of crude?
In the case of crude, I think it's a very similar situation to a lot of these markets where because we had such a huge amount of cross-asset volatility where we had these huge drops or huge rises. It's an issue of moving sideways now, large daily swings and releasing the price compression. I think there's a lot of room for, you know, tactical trading or if not daily trading, but in terms of like looking out intermediate term, I'm not a buyer at this point.
Do you think it can actually produce a lower low from the 19 spike we saw? I mean, do you think we can very briefly trade towards like 17 is a long-term level of interest as well, or, you know, 15 or whatever?
I see this area here. This looks like about 17-ish.
It is. That's a 17. Yes.
Yeah. I think there could be some residual selling pressure left in this, but I think it's pretty limited. I think it's limited. And I think you're going to see some announcements, at least in the next few weeks, that are going to be supportive of oil. I wouldn't, you know, it's not something that I would.
Cutting off supply to support the price.
Exactly.
Yeah.
Exactly. But you'll notice here, I mean, why I look at long-term charts, you can see here where the 200-month moving average was here and you had it there and it just got above, and then there you have a fail underneath. And then you basically have this head and shoulders pattern and a breakdown there. So it wasn't like this should have been a big surprise for people. I think maybe the speed in which it took place was, but the decline shouldn't have been.
Indeed, indeed. And in any case, if the dollar fails from here, as you said, it's in a pivot area in essence. Obviously, that's going to assist the vast majority of commodities performing better against it. I mean, it's.
I mean, one of the ones that I'm really actually might be the most curious about is what copper is going to do next year. You know, it was one of those. It was trying to hang on, and it finally broke there. The last couple of days of the panic situation in the markets. But you'll notice here it's sitting, you had also a head and shoulder type of formation. This is a little bit too extended to be, it's a little bit deformed. But anyways, you'll see it was along the 200-week moving average there. And it was also similar on the monthly chart.
That's a Quasimodo head and shoulders.
Quasimodo?
Yeah. You know, the hunchback of Notre Dame. Sure.
I like that. I'm going to steal that.
Oh, go ahead, buddy.
Okay, we'll add it. That's new technical terminology there.
Oh, that's a Quasimodo.
Yeah, actually, on the monthly chart, you can really see that there. You'll see also here you had the 200-month moving average in play where it was only gold resistance. So, and then you had a bearish outside month, and then you had that drop down. So, you know, being in Chile and the largest exporter of copper, you know, everybody's sort of got their fingers crossed that the dollar weakens at least for a while. We can get that back up here and a little bit higher.
How's your local domestic currency? What's it called?
Peso.
Okay, and has that been depreciating against the dollar as well for a long time?
Yeah, I'll bring up a chart here, let you take a look. This was, for me, this is one of the interesting patterns you'll see here. You have a gigantic base formation here going back to 2002, right? And you could even call that a cup with handle, and then you had within the handle you had a cup with handle, the whole concept of fractals. The breakout. The thing about Chile is that we had a lot of social, political dislocation last year, particularly in the month of November. And you have this huge month where you have the breakout above both resistance levels, and then what's taken place in 2020 has carried it back up to those levels there. The central bank has been intervening to some extent here to try and cap this move. I think we'll see consolidation, but I think there's probably more upside to go for the pair.
Okay. Well, what a great.
Go ahead.
Go ahead. No, go ahead.
No, I was just going to bring up the U.S. dollar real chart. It's a very similar situation. You'll see the big base, etc., and then a big breakout this year. I think consolidation to come in that, and then I think it moves higher also the pair.
Do you think the U.S. is going to do anything with Venezuela sending out naval task force into that area? I think they've been wanting to. What's your feeling?
Yeah, I think they've been wanting to for years, to be quite frank. I don't think that policy really has changed, and I don't know. It's a tough one to call. I mean, that's a powder keg. I think a lot of people are worried about if Maduro's gone, what is that going to mean for the country? Is it going to just disperse into chaos or not? It's such a divided situation. I think they might do worse than better by getting him out.
Okay. All right. Well,
not that I'm in favor of him, but
yeah.
Speaking of which, Chile is one of the biggest producers of copper in the world. If people
we are the largest. Yeah.
You have Codelco, is it?
That's correct. Right, that's a state-owned.
It's a nationalized. It wasn't always. I think it was nationalized at some point, if I'm not mistaken.
Yes, many decades ago. It's actually a very important to the treasuries, you can guess, and it also supports the armed forces here too. In terms
so obviously, at some point when copper makes a big reversal, that should also be quite supportive for the Chilean peso. In my opinion, it's going to come a time that being long all those exotic currencies is going to be really lucrative. For example, what is the central bank rate in Chile at the moment?
That's a pretty good question. I actually don't know off the top of my mind.
Anyhow, if I remember right, there is a nice carry trade in being long the Chilean peso. So at some point when all these currencies are, posting nice reversals, I think it's going to be a good opportunity being long some of them, including the Chilean peso.
Yes, I agree. I am long the peso against this. But there's one thing about Chile that's a little bit different, is because we had the political and the economic unrest last November, and it was so severe that it prompted a plebiscite on the Constitution. And that was actually supposed to come this month, but it was postponed because of the virus till later this year. And I think that's going to be a dark cloud over the currency for a good part of this year still.
Okay. So, well, I'm not going to let years pass before you and I talk together. Some great macro views. Again, Sheldon, your demeanor is like, calm and some real nice looks. I missed the part with silver. Was that a false breakdown and you're constructive on silver?
He's more constructive on silver, he said, than gold and the rest of the metals.
Okay. Yeah. Well, the action's saying that. So I want to thank you for coming here, and may you and your loved ones remain untouched. And really nice to talk to you again, Sheldon.
Yeah, thanks for having me, Dale, and congratulations on the anniversary. And also the same to you and your family. You guys, take care.
Okay, Sheldon.
Thank you. You do.
All right. So that's a wrap. Sheldon, people could follow you at Hurt Capital on Twitter. Anywhere else?
No, you can find. I post my views somewhat regularly there. That's the best place for it.
Okay, buddy. So thank you, my trading warrior brother, Sheldon McIntyre. We'll see everyone tomorrow. Remember, don't just count your pips, count your blessings, and we'll be giving away some 3 more free subscriptions tomorrow. Adios. See you tomorrow. I'm going to have Chris from Second Skies Forex with us. So see everyone tomorrow. Be well and prosper. Adios. Thanks again, Sheldon.